Hey everyone, thank you for joining us once again here at Seafried and Brew for our weekly briefing. For this week's briefing, we want to go over the second release of the GDP, look at some additional releases that came out on economic data pertaining to inventories and durable goods, and then finish off with the ISM index. But overall, when we look at the GDP, not much of a change. It did go down to a 2.5 from its original release at 2.6. So down slightly. The only real changes occurred in investments and governments, down less than a basis point for each of them. So no real big change, and it came in as expected. We will continue to monitor this as the third release comes out next month. Looking at the core PCE for inflation, though, we can see it pretty much just leveled off from where it was last month. Month over month change at overall PCE, 0.4%. The consensus came in at 0.4. For the core PCE at 0.3, and the consensus at 0.3 as well. Similar with the year-over-year changes, overall changes 1.7, consensus at 1.7. Similar for the core PCE, 1.5 with a consensus of 1.5. So no real big changes inside the inflation factor. Now let's look at the inventories. January inventories on the resale side up 0.8%, higher than the prior number, which was up 0.3. So we saw some buildup of inventories. Similar on the wholesale side, up 0.7, and the prior release in December was up 0.6. Therefore, we see also on the wholesale side that increase in inventories. And this is important because this is kind of leading into that first quarter GDP, propping it up a little bit. As we know, over the past several quarters, we've seen reductions in inventories, and we want to stop that from happening and start rebuilding these inventories to help that business investment section inside of GDP. Also with the durable goods, their inventories up 0.3%, slightly below where we were last month in December at 0.5, but we continue to see momentum in pushing those inventories up. Speaking about durable goods, in that release, kind of a little softer though, we saw January new orders actually declined by 3.7%. We anticipated, or the consensus was that they would decline by 2%. So this is a much greater decline than anticipated. And in fact, we saw it not only in the transportation, but also in the ex-transportation coming in at negative 0.3%, whereas consensus, they anticipated it at 0.3%, a growth. So we saw that pullback in the overall new orders. Similarly, we have capital goods down 0.3%. The consensus was for it to increase by 0.5. So the durable goods kind of showing a little bit of softness. Shipments continue to grow, however. They're at 0.2, prior 0.5, so a little softer in the shipments, but they continue to grow. The unfilled orders, however, declined, showing a reduction in the backlog for the durable goods release. The prior month, December, showed an increase of 0.6. So we continue to look at these monthly indicators to give us some type of indication as far as where the economy is going. And from the durable goods, a little softer in here. Finally, let's finish up with the ISM business report. And we can see this is on the remanufacturing side. Overall, an increase, 1.7 percentage points change in the PMI index. up to 60.8, very strong. We continue to see the strength. And as we look down the different components, we can see new orders while it fell month over month from January to February by 1.2 percentage points. It continues to grow, and it has actually been growing for 26 months. And we've seen this in the overall chart. If you look at it, it continues to have an upward trajectory. That's positive. Employment up 5.5 percentage points, and this is because we start to see in this report this backlog beginning to increase. You can see the backlog of orders up 3.6 percentage points. We see the inventories on this side. We mentioned this when we were talking about inventories. That was up 4.4 percentage points in the index. And then overall, when we look at the exports and imports, exports increased as well as imports. However, exports did increase at a faster pace. So that's something to keep an eye on. That's a positive overall for a GDP. But the overall economy and the manufacturing sector both continuing to show growth throughout this index and faster growth. And it's amazing, you look at this overall economy, and we've been in this growth trend for 106 months, according to the ISM index. When we look at some of the comments from the respondents here, we can see employment, number one, becoming an issue. It says employment is one of our biggest challenges, no available labor. When we start to see comments like this, we could ask the question, are we going to start to see that overall level of wage inflation pick up? Also promising, it says they said it seems that tax breaks for businesses is making a difference. Customers are spending more for capital equipment. That's a big positive, because built in some of these projections for our GDP is this tax benefit for these corporations, the lower tax rate, in order to spur on investment. So we're hoping to see this continue to happen. Also, it says we expect to have a strong year in 2018. An expectation we have added to our sales force or sales staff and plan to adding to a production staff. Very important. So we have employment continuing to grow. And then lastly, the weakening US dollar in relationship to the yen is starting to impact importing cost. This is looking at inflation here. We are starting to see more supplier price increases. So that's the question. Are we going to start to see this wage inflation because of the no available labor and the expectation to increase their overall labor force, needing to increase labor cost in order to retain or keep, and as well as bring in individuals, but also on the product side, the price increases because of the weakening dollar. So it should be an interesting couple of months as we look at the numbers coming out. We look forward to sharing all this information with you. So you have a great week, and we'll see you back here next week.